Good morning. It's Friday, the 5th of December, and this is Govindraj Ethiraj broadcasting and streaming weekdays from Mumbai, India's financial capital, our top stories and themes. Will the Reserve Bank cut interest rates today? The factors that are at play. The stock market snap a 4-day losing streak. What is the central bank view on the rupee? Indigo says normalcy only by the 10th of February 2026, and that's almost 8 weeks from now. Apple is shipping a record number of iPhones thanks to the successful iPhone 17.
This is a core report with Govindraj Ethiraj.
Will we see a cut? So the question, of course, is will there be an interest rate cut in today's credit policy, and what could that do to the markets if the Reserve Bank were to cut interest rates? Now, the straight answer to the first question should be unlikely, if not a no, because why would you cut interest rates when GDP growth is at a solid 8.2% for the latest quarter, that's up to September? But what if the Reserve Bank of India concludes, like some other candid economists have, among other things, that actual growth is a little lower than that? Investment bank HSBC said, for example, in a note earlier this week, that the 8.2% number benefited from both a cyclical boost as well as a statistical anomaly. On the cyclical front, the bank says that strong rains, monetary easing, fiscal spending, and goods and services tax rate cuts all came together nicely. But on the statistical front, a low base and deflator issues may have exaggerated the numbers. Now, HSBC says that they estimate the two deflator issues affecting manufacturing and services sectors respectively may have understated the deflator by 1.2 percentage point and overstated real GDP growth. So, according to them, their estimate of actual growth in the quarter is closer to 7%. And that, says the bank, is still a strong performance, but lower than the released 8.2%. On the other hand, even if there was an interest rate cut, what could it do to the markets? And how much do banks really transmit those interest rate cuts? I was talking to a banker last night, and they said that the Reserve Bank puts a lot of pressure on them to transmit those rates so that borrowers like you and me can benefit. But does that really happen? And to what extent, I wonder. Back home, the stock market snapped a 4-day losing streak on Thursday. Benchmark indices, the Sensex and the Nifty, were in the green thanks to IT stocks, even as the rupee hit that record low of 90 rupees 56 paise, though it recovered later. The Sensex closed at 85,256, up 158 points, and the NSE Nifty 50 was up 47 points to 26,033. In the broader markets, the NSE Nifty Mid Cap 100 and the Nifty Small Cap 100 were down slightly. Meanwhile, another bullish call, this time from Bank of America, which expects the Nifty to deliver 11.4% returns by calendar year 26 as earnings cuts ease, growth prospects improve, and foreign portfolio investors return, according to a report in the Economic Times. Now, the Bank of America does not foresee valuations expanding meaningfully in the year ahead, but it does believe that the Nifty can continue to command a modest premium to its historical averages, settling near the 19.6 times earnings. The optimism for them stems from the current earnings cycle. The note said that, in fact, basis the current earnings cycle, the Bank of America says that Nifty deserves to trade at valuations slightly above its long-term averages at 19.6 times. It also points out that the 50 stock index has put up a fight delivering positive returns for the past 3 months, though year-to-date returns are below the 10% mark. Now, to return to the potential interest rate cut by the Reserve Bank of India today, HSBC is arguing that in the inflation growth debate, they believe low inflation is a more convincing dynamic than high growth, as the latter has deflator issues. And further, a low nominal GDP growth strengthens their case. That's HSBC's case. And more significantly, as we've been discussing on the core report as well, external finances are weakening, which is putting pressure on the rupee. But a gradually weakening rupee is the best shock absorber for high tariffs, particularly the tariff walls for exporters into the United States. And rate decision says HSBC should focus on the growth inflation trade-off instead of the currency. Meanwhile, foreign portfolio investors have sold something like $933 million worth of shares so far this week. That's more than twice the $425 million in outflows in all of November, according to Reuters. And before we continue, join us for the third edition of our partners Algorand India Summit on December 6th and 7th, 2025 at ITC Gardenia Hotel, Bangalore. Registration link in the show notes, and let's get back to the show. The rupee strategy. The rupee is on a weak footing versus the dollar. Whether it will remain so is an economic and perhaps even philosophical question. Should the Reserve Bank keep selling dollars to lift the rupee or let it float a little, as it has evidently done in the last few weeks? Because a depreciating rupee is the best available buffer, as we've just discussed, against the tariff shock that Indian exporters are facing, and particularly to the United States. Now, the Reserve Bank will tolerate a weaker rupee as the country's external sector confronts multiple headwinds, including a wider trade gap and stalling of dollar inflows, according to Reuters, which is reporting basis conversations with people in the central bank. Now, the Reserve Bank of India, which supported the rupee through aggressive interventions via dollar sales until last month, has now allowed the rupee to fall about 1.3% in the last 7 trading sessions to a record low of 90 rupees 42 paise. The rupee is also down about 5.5% this year and is Asia's worst performing currency. The sources also told Reuters that by signaling tolerance for a weaker rupee, the central bank is indicating it will intervene mostly to curb sharp volatility or on any signs of a speculative build-up, but not defend any specific level on the rupee. Now, this is obviously something that's also in a way unstated government policy, given the fact that the country's chief economic advisor on Wednesday said he was not getting sleepless nights over the rupee's fall. And if there was a time to depreciate for the rupee, that is, this was it. To come back to the sources at the central bank, according to them, it doesn't make sense to spend reserves when fundamentally everything is against the currency. And they also said that as and when fundamentals and real dollar demand dictates, the central bank does let the rupee move more than it normally would. And of course, there is the fear that speculators who are already believed to be flexing their muscles will move in more actively. At that point, the central bank could step in and stamp out those as needed, according to those sources who spoke to Reuters. And finally, on Thursday, the rupee did end above the 90 per dollar level after hitting a record low as dollar sales from multiple foreign banks, likely on account of inflows, helped the currency snap a 6-session losing streak. The rupee fell to 90 rupees 42 paise early in the session before reversing course to close at 89 rupees 97 paise, according to Reuters. A bet on gold. Stock prices can be tough to call for the year ahead, though people do that, because the variables are many. How about gold? Well, it seems to largely depend on one person, that's US President Donald Trump. Gold prices could rise between 15 to 30% in calendar year 2026 from current levels, according to a note by the World Gold Council. That is over the 53% that gold prices have risen already this year, as investors have bulked up on the yellow metal against the backdrop of US tariffs and geopolitical concerns. As part of that, we've also seen central banks, including India, stepping up their purchase of gold. And the WGC report says that the combination of falling yields, elevated geopolitical stress, and a pronounced flight to safety would create exceptionally strong tailwinds for gold, supporting a sharp move higher. Under this scenario, it says, just to come back to that figure, gold could appreciate between 15 to 30% next year. Moreover, investment demand, particularly via gold exchange-traded funds, would remain a key driver, offsetting weaknesses in other areas of the market like technology. Some of these arguments apply to silver as well, where both institutional and retail buying is up sharply, and prices, as we can see and have been discussing, are at record highs. On the other hand, if Trumponomics does well for whatever reason, and some of that fear recedes from the markets, then gold prices could fall, says the World Gold Council, and that could lead to a fall of anywhere between 5% to 20% in the calendar year 2026. For that to happen, says the WGC, Donald Trump's policies need to succeed, resulting in stronger than expected growth linked to fiscal-induced support in the United States. And then, under those conditions, reflation takes hold, pushing activity higher and lifting global growth towards a firmer trajectory. And I'm sure people would like some of that. And if they like that, would they be willing to give up some of those gains on the dollar? The Trump family, of course, has also been focused on crypto, which has been battered recently. And let's take a moment on that. There's an interesting Bloomberg report which says that for as much as broader crypto markets have sunk in the last 2 months, about 25% in the case of bellwether Bitcoin, projects that are tied to the Trump family are down much more. World Liberty Financial, co-founded by President Trump and his sons, has seen its token tumble 51% from its peak in early September, more than both Bitcoin and an index of smaller digital tokens. Alt5 Sigma, a company promoted by the Trump sons, has plunged about 75%, even as it deals with a growing number of legal problems. And then there are those meme coins, says Bloomberg, named after the president and his wife, which have fallen about 90% and 99% respectively from their record highs back in January. Now, Bitcoin, of course, fluctuates wildly, and that's one reason we don't talk about it much on the core report. And of course, the more important fact that it's not a recognized trade in Indian securities markets. Back to gold, global gold ETFs have seen about $77 billion of inflows in 2025, according to WGC data, adding over 700 tons to their holdings. Nuclear power. India's nuclear power generation capacity is set to rise from the current 8,780 megawatts to 9,480 by the end of the current financial year and go up to about 21,880 or close to 22,000 megawatts by 2031, which is roughly 5 years, as projects under implementation get commissioned according to the government, which said so in a written reply in Parliament. There are several reactors which are currently under construction, including in Rajasthan and Haryana. And there are more in the pipeline. That's about 10 reactors of 700 megawatts each in Kaiga in Karnataka, Chutka in Madhya Pradesh, Gorakhpur in Haryana, and in Rajasthan as well. Oil prices rose on Thursday on investor expectations that the Federal Reserve will cut interest rates, while the stalled Ukraine peace talks tempered expectations of a deal restoring Russian oil flows, which was obviously quite high, or rather the expectations were quite high just last week. Crude rose about 81 cents to $63.48 on Thursday afternoon, according to Reuters, which reported on the latest oil prices. And this segment was supported by India Energy Week 2026, to be held from January 27th to January 30th, 2026 in Goa. You can register for the same using the link in the show notes. Indigo imbroglio. Indigo on Thursday told the Aviation Regulator Directorate General of Civil Aviation that its operations will be fully restored by February 10th, according to Reuters. Now, that's 8 weeks away, and pretty much everyone who travels or knows someone who travels or flies has faced a Indigo delay, if not cancellation situation in the last few days. And I attended a conference in Cochin where people could not turn up, including some who actually sat in an aircraft in Pune and then had to go back because it did not take off. So, Indigo, which is struggling with a growing pilot shortage and the implementation of the flight duty time limitation rules, has sought relief from the DGCA regarding some of the provisions of the rules that limit pilot duty after it cancelled hundreds of flights this week. It said that the disruptions have arisen primarily from misjudgment and planning gaps in implementing the new rules, and also said more cancellations are expected in coming days. Indigo is the largest airline in the country with about 2,300 daily flights and has cancelled over 300 flights in the last 2 days and delayed hundreds more. The DGCA also put out a statement on Wednesday saying that almost 60% of the cancellations of Indigo flights were due to flight duty time limitation issues. So which brings us to the question, what brought things to this pass? What are flight duty limitation issues? We've talked about them in the past, but it's worth revisiting them. And more importantly, could Indigo have foreseen this? And finally, will other airlines or could other airlines also be facing similar situations which we perhaps don't know about? So I reached out to Captain Amit Singh, pilot and aviation safety strategist, who's flown on both Boeing 777 and Airbus A320. And he specializes in flight operations, safety management systems, and regulatory compliance. I began by asking him whether this was a situation that Indigo could have foreseen.
I don't see any planning gaps here because the airline plans the summer schedules and the winter schedules. That's what they've been doing year on year. And they have a whole commercial department. They take the schedules to the regulator approves them based on some data that they provide that is published by the regulator. They proudly boast that they're increasing the number of passengers that they're carrying, number of destinations that they're serving, increased number of aircrafts. They are number one. So from planning point of view, there is no issue. What the basic issue is, what they have cited is the flight duty time limitations. So it is not that something happened on 1st of December or 2nd of December that they woke up that, oh, we are short by so many 100 pilots. So that is not a planning issue. because they have the best softwares. They keep a track of everything. The airlines matches the line ready pilots available, because you have a number of pilots. Some may be under training, some may be undergoing medical, some may be on leave. So what are the line ready pilots available to an airline? So that is the number they have. And then they match it with the number of flights. So when you're planning the next month's roster for the pilots, you put down pilots against each flight. That is when you will come to know that so many flights are open without any pilots. Planning must have started way back. And how they plan is that you have an empty chart with all the flights. First, you plan your training, that so many pilots are on training, because that is mandatory. Other safety training or courses and leave. Then whatever is left, that you plot against each flight.
Right. So I was talking to an Indigo pilot this morning, actually, and he was saying that, from his perspective, not from a sort of management perspective, that one is the number of winter flights have increased and the number of pilots have not in the last 6 months or so. And you also have the FTTL. Now, I'm just trying to understand the variables at work here. So the FTTL was a known factor, the winter schedule was a known factor, and pilots, let's say, may or may not have been able to ramp up to the extent needed. So why would any airline not be, let's say, gearing up for an FTTL change, given everything else that is in its control?
See, the schedule, of course, they're aware. And when you submit schedule for approval to the DGCA and you increase the number of flights by 6%, 900, 856 additional flights per week. So you have to see how many pilots I have. So either there's a disconnect, those departments are working in silos, that the commercial department goes ahead and says, we want more flights, we want more revenues, and they do not inform the flight operations. When the schedule is approved, they give it to the flight operations. That happens in airlines, mostly public sector airlines. The commercial is going ahead with expansion. They don't have pilots. The operations department is not taken into confidence when making the schedules. But this Indigo, the way they run, they are very highly coordinated airlines and very well run. This was a strategic move to save costs. Again, save costs in terms of number of pilots. So every department has some projection on cost saving year by year. So if, for example, the flight ops will say, this is my flight ops budget and I'll manage within this budget. So once they have committed, they'll try to keep the costs under control. Keep the cost under control means maximize the utilization of pilots, and if required, get some regulations changed or waivers done so that with the existing human resources, we can continue to fly even with the extended or enhanced schedule. So this is a department's basically overreach, they're overstretching. But at the level of a accountable manager, the CEO, they have to understand that you cannot go beyond a certain limit and you have to have fallbacks. If your calculation is based on certain presumptions that this particular rule will get implemented, then what if it doesn't? Is there a fallback? So there was no plan B.
So you're saying the airline was betting on the rule not being implemented or being given an extension?
They were looking at implementing the fatigue risk management system, for which in September, DGCA issued a draft circular to the airlines. Fatigue risk management system is a highly specialized data-driven system which no airlines in India can manage. But they wanted to implement it only because they saw the advantage of stretching the number of hours a pilot can fly. That advantage they saw and they wanted to implement it. The regulator is not prepared. After the Mangalore accident, the committee recommended that FRMS should be implemented. Then there was a ZADI committee after that. The ZADI committee examined the whole FTTL issue and they recommended that FRMS must be implemented, because at that stage, ICAO did not come up with FRMS, but they had it in the draft. So the ZADI committee said that whenever ICAO implements FRMS, we should be ready. So DGCA should start training their officers on FRMS. But unless you are trained on FRMS, how will you approve a system? Right now, who's trained in DGCA on FRMS? So that is the issue. So the operator basically went to the regulator that this is the way we can stretch the number of hours and we need this. So that case must have been accepted by DGCA. DGCA issued a circular. The ICAO and DGCA's own regulation says that if you want to implement FRMS, you have to make regulations for it. So a regulation cannot be implemented by a circular. A circular can give you guidance on how to implement the policy. right? But it cannot be the regulation. A circular cannot issue a circular that this regulation is implemented and this is how you will implement. It has to be a civil aviation requirement, which means that CR has to be drafted, put out to the public for comments for 30 days. Whatever comments are received, that you deliberate upon, accept or reject, then you formalize that this is the new regulation. But DGC wanted to do it through a circular. And there was opposition to that from various pilot bodies. And beginning of the month, these pilot associations met the DGC and they said it has to be a collaborative effort. You cannot do it unilaterally. So I think DGC saw that there is a pushback. So they did not approve the FRMS, which was the plan A. There was no plan B for Indigo. So that failed, and that basically there was a collapse in the whole system. That was the premise based on which that is what I feel. Was suddenly nothing happened. The fatigue management FTTL was introduced in January of 2024. There was a pushback from the airlines operators. In March, it was kept under abeyance. Then the associations of pilots they went to the High Court, and the High Court gave directions for it to be implemented. The ECA said we will implement it in a phased manner. And when the first phase was implemented, which was the toughest one, wherein rest period was to be enhanced, so nothing happened. No flights got cancelled, nothing happened. The second one was implemented, nothing happened. But suddenly on second, the whole thing system collapsed. A lot of people may have lost a lot of money, a lot of precious time, and businesses may have been affected. People who are going for medical treatment may be affected. So who's responsible for this? The government has given them extension that, okay, we feel it is a FTTL issue and we extend it to February or later. But who will pay for all the losses? There has to be an inquiry to it. A committee has to inquire. So what I feel is that 4 people in the ministry or DGC have decided this, okay, give them extension. But then there has to be a fine along with it. The passengers have to be compensated. So there is no deterrence. Tomorrow, Air India will do the same thing.
So that was my next question, actually. So, how are the other airlines faring on this count? I mean, they've all had to meet this same FTTL deadline, isn't it?
When the phase 1, phase 2 were implemented, nothing happened in Indigo. So why suddenly on 2nd December things collapsed? So there has to be, that's why I'm saying there has to be an inquiry. A committee has to sit down and investigate on what happened on that day. Air India as such, they do not have such a shortage. They in fact have on some fleets excess pilots. That's why they were thinking of giving a flexible roster to the pilots. So they're not so tight on the pilot situation. It is not that better managed or something. Indigo was supposed to be better managed, but they have deliberately led to the situation wherein the public has been put to inconvenience and they have got away scot-free.
Right. Let's see. I mean, as you said, there will be an inquiry and it's going to reach some logical conclusion. Last question, Captain. So, I mean, you're an active pilot yourself. Just for people who are trying to understand the whole issue of flight duty time limits, which is what this seems to be centered around. Where does India stand vis-a-vis other parts of the world, including the parts that you fly in actively?
See, if you look at the flight duty time limitation, it is a human being and the human body which is involved. International Civil Aviation Organization, when they have drafted the rules, they say that it has to be scientific because human physiology is a science. So the regulations have to be scientific. Indian regulation is nowhere close to science. It is ad hoc. The way things have perpetuated and what you have seen in the last few months or few years, everything is done ad hoc. So that let's increase it by 2 hours, let's decrease it by so many hours, let's give them an extension on this fleet. So that is all ad hoc. There is no science behind it. If you look at science from the early days, 1996, wherein NASA said after an extensive research that the maximum flight duty period should be 10 hours, not more. Beyond 10 hours, then the probability of an accident increases by 1.7 times and so on. So there's a whole science and calculation behind it. So even EASA goes up to 13 hours. So Europeans, what they did, they have a committee of doctors, 13 doctors. They have a committee of specialists in everything, in cardiology, psychology, neurology. All these doctors sat down and then they prepared a flight duty time limitation. So they also said 10 hours is the max duty time. You should not go beyond 10 hours. And EASA finally went up to 13 hours because EASA said that we have to balance between commercial and safety. So if we are giving 13 hours, we'll make sure that the rest is accordingly given. But the committee put it down on paper that even though EASA has gone to 13 hours, it is beyond violating the scientific norms. So in India, if you ask them, what is the logic of 13 hours, 16 hours? So there is no science behind it. In India, weekly, we can have a flight duty period of 60 hours. The World Health Organization and International Labour Organization have released a statement that globally there have been 745,000 deaths in 2019 because of cardiac issues and stroke, working more than 55 hours a week. But pilots can fly 60 hours. So that is the kind of working conditions under which Indian pilots are working. If you see the graph, and I have published it, the number of temporary unfit and permanent unfit pilots are increasing year on year. So there has to be a system, a safety management system should look inwards that so many pilots are becoming unavailable for flights. Is it because of our schedules? Are we pushing them? Are we giving them adequate rest or not? But nobody has done a study on that. So it is just kind of mechanical that you have to be available, you're not available, then we hire another person. So it is that kind of situation. The culture, the safety culture in India is such that the pilots are crying out for help, but the system says, no, since you are legal, you fly. But the legality, there's no science for it. Even the courts will not entertain that because somewhere there has to be sense or logic. Logic is only in science.
Right. Thank you so much for joining me today.
Thank you very much.
Apple's record. Apple will hit a record level of iPhone shipments this year, driven by its latest models and a resurgence in its key market of China, according to research from IDC and in a report in CNBC. Apple will ship about 247 million iPhones in 2025, over 6% compared to last year, and that's more than the 236 million it sold in 2021 when iPhone 13 was released. The reason for all of this is obviously iPhone 17 has done well, including in India, which is a base for its manufacturing. And Apple's predicted surge is thanks to the phenomenal success of its latest iPhone 17 series, a senior research director at IDC told CNBC, adding that in China, a massive demand for iPhone 17 has significantly accelerated Apple's performance. IDC's report follows on from Counterpoint Research last week, which forecast Apple to ship more smartphones than Samsung in 2025 for the first time in 14 years. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.